crypto people think it's all about crypto and its regulators and its FTX. It's not, none of that. So liquidity was taken out of the system.
Indeed.
And we've got the asset that moves most according to liquidity. So when liquidity comes out, it falls a lot. When liquidity comes in, it rises even more because there's a secular uptrend. So how I look at crypto is, if you take the log chart of crypto, which everybody, Bitcoin, which everybody's looking at,
we know it,
you know, you use that and it goes in these big cycles. And those big cycles are the monetary cycles, liquidity cycles, but it's still always going up.
Raoul is a prominent investor, entrepreneur, and founder of Real Vision, a financial media company. In this discussion, he shares his views on the current business cycle and recession, as well as his predictions for the future of the economy and various investment assets. Raoul provides a detailed analysis of the current economic situation and the possible outcomes for various assets. He considers the current recession to be a typical occurrence, with inflation being the only abnormal factor due to the pandemic. He predicts that interest rate hikes are unlikely, while rate cuts and more monetary liquidity are likely outcomes. Powell believes that certain assets perform better in liquidity environments, such as technology stocks and crypto, due to their secular trends driven by technology adoption. He notes that Bitcoin is a pristine asset that cannot be manipulated and could be used as a reserve currency like gold, but with the advantage of being easier to send around the world. Ether also has his attention due to its yield and comparable technology to the Internet of Money. Powell is cautious about NFTs and DeFi and believes that there needs to be a breakthrough in DeFi to make it more appealing to people, particularly institutional players. He sees AI as the replacement for human knowledge and thinks that it will aid in the adoption of cryptocurrencies. Powell also mentions the innovations in the space industry and suggests buying more cryptocurrency to safeguard portfolios during an impending recession. Let us now delve into this broad range of insights from Raoul Pal.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
There's a lot of noise on Twitter about the end of the world and all sorts of things. I think of this, what we're going through now, as a kind of normal business cycle recession. The only abnormal things were the inflation that was the direct opposite of the pandemic. So as there was no supply of any goods and services, people came online, then we had the Russian crisis. It was a very rare occurrence. And that led to the highest rate of change of interest rates, particularly in the United States, in all history. So it's a very extreme outcome. But generally speaking, it looks like a business cycle. And business cycles, rates go up, the economy slows down, we get a recession, and then it heals. Okay, fine. So that's kind of what I'm thinking. And I think Europe's lagging the US somewhat. So I think the US probably we're probably in recession in the US. It probably gets to the worst part of it in the next quarter. And then we probably start the recovery phase. But that takes a long time. And it's always when things feel worse is when the bottom comes in. And Europe probably lags that somewhat. It's slightly behind in the cycle, maybe 3 months behind. So we're at the end of the interest rate hike cycle because now we've broken the banking system again. So once you break that, and so we got to the end of the rate hike cycle. That's about to change. Europe will follow. Again, it's always later. Now, the psychology of the market cycle is the chart you've just put up. Always interesting. We are at the disbelief phase and depression phase. So this is where people can't believe the markets are rising because they know the economy is getting worse. Because the economy, what you're looking at is today's data. The macro world lives on forward looking. So you have to live in the future. So let's ask ourselves a simple question. Okay, there is a recession. We've broken Credit Suisse. We've broken Silicon Valley Bank. There's probably going to be a few more. What is the outcome? The outcome, we know, is with almost 100% certainty is rate cuts, and almost with 100% certainty is more monetary liquidity. So therefore, asset prices should start pricing in those things, because the biggest driver of returns since 2008, when everything changed, has been balance sheets of the central banks, liquidity. So if you take, I use the G5, the balance sheets of the G5. So that's the ECB, the Fed, the Bank of England, Bank of Japan, People's Bank of China. You make a composite of that and map the S&P 500 against it. 97.5% correlation. It's basically the same thing. Now, when you look at that, you realize that now the S&P is basically a voting machine or a probability calculator to when is it coming and how big is it going to be in terms of liquidity. So that's why it's going up. Now, when it comes to assets, we know that certain assets do better in liquidity environments. So European equities have never been great because there's not a lot of investors left in Europe. I mean, the average person, even their pension funds, tend to own more bonds than they own equities. So it's not a big investing culture, stock market culture.
Yeah,
but the US is. What we find is that, generally speaking, the S&P 500 does pretty well. Technology stocks, gold does okay. Technology stocks do really well, and crypto does ridiculously well. And why is that? It's because really economic growth is not high enough to sustain ongoing high equity prices, which is what's happened in Europe. In the US, it's optically looks like they're going higher, but it's actually to do with the reserve currency of the world being debased. So when you divide the S&P by the Fed balance sheet, it's gone nowhere. It looks like the European stock market. It's gone nowhere in 20 years. But crypto and technology do beat debasement of currency, and it's because they're secular trends driven by adoption of technologies. So they have a tailwind, while everything else is driven by an aging population that's massively in debt and an economy that's slow.
Raoul expresses caution regarding the future of NFTs and DeFi. He believes that we are still in the early stages of understanding where these technologies will go and what applications could be built on them. Raoul also acknowledges that DeFi is still struggling to gain traction due to regulatory challenges and its complexity, requiring users to have expertise. He also discusses new technological advancements and their role in cryptocurrency adoption. Let's now return to the video.
Asset management business called Exponential Age Asset Management that invests in crypto hedge funds. And the reason is we know that individuals are coming into the space. So that's, you can own the underlying chains, you can own NFTs, all of that stuff. But we know the institutions are coming to invest as well. And we know a lot of them are interested in DeFi. But when I look at it, the hedge fund space in TradFi is $3 trillion. The hedge fund space in crypto is about $5 billion. So the reason you're seeing so much arbitrage opportunity is it's a function of not enough capital in the space.
Yeah.
Which is why when somebody blows up, it has huge knock-on effect. When 3 Hours Capital blows up, it has huge knock-on effects. So there's not enough capital in the space. That will disappear over time. I mean, trust me, as soon as they can, every investment bank will trade the arbitrage as they always do. All of the hedge funds will. The market makers do already. And that's a good thing for DeFi.
Yeah.
Even though, yes, the yields will come down and etc., but you're basically putting risk-taking in the hands of risk-takers and diversifying out a bunch of, 10,000 hedge funds that are all running, billions of dollars. We have a much more robust DeFi system. Right now, DeFi is still a bit fragile. That GPT-4 large language model was like, GPT-3 was good. GPT-4 was at a whole order of magnitude different. And now these agent AIs being built on top, where it basically does the work of a person. You can ask it to do stuff, it does all the tasks. That's all happened. That whole agent GPT thing has happened in a week. Okay, what does it mean for crypto? Well, firstly, all of this is moving towards the metaverse, which is the digital lives that we all live. Even now, we're partly in the metaverse by using video technology to do this. But as we accelerate and hurtle into the metaverse, which was a hype word, it's now fallen down. And trust me, it's coming up the other side again as AI blends with the digital world, because now you can make digital images super fast and digital avatars and everything else. It also means we can make a huge amount of fake stuff. And that is not a good thing for society where you don't know who to trust. We already have a fabric of trust that's broken down across the Western world. People don't trust their governments. They kind of don't trust each other. I mean, it's difficult. So if you allow this technology to proliferate deep fakes, we've got a real problem on our hands. So the only way I can think of really truly authenticating content is using blockchain technology. So I think it's that. But on the other side, it does accelerate the metaverse. And what are assets in the metaverse? They are NFTs. What is the payment system? What is the payment system from AI to AI? We're already seeing these agent AIs. Well, soon we're going to have payments. Hey, if you want to use my agent, you're going to have to pay me, and one AI will pay another. That is not happening in US dollars. That is happening in cryptocurrency.
Yeah, for sure.
We're also seeing space. Really interesting. I interviewed a guy who came out of Jet Propulsion Labs at NASA on Real Vision called Leon Alkali, and he started a VC fund for space. I'm like, really? What's there to do? And he's like, oh, you have no idea. And again, it's on YouTube. It's unbelievable what people are building in space, what they're doing. I mean, he's like, oh, we're going to have 3D printing of machinery on the moon pretty soon, so we can then build rocket ships to take us further because we avoid the gravitational pull of the Earth. He says we're also stringing up, if you look what SpaceX is doing, we're stringing up server farms and satellites everywhere. I mean, a satellite now is coming up in this size, and they're being spread in a network everywhere. So anybody can own a satellite. The costs are coming down exponentially. And what they're saying, what he said to me, I didn't realize this, is like, oh, well, there's a problem now because so much data is being generated at the satellite level. They can't keep sending it down to Earth to be processed. So what they do is they're building server farms in space, and you have to pay for the data storage. And the answer is cryptocurrencies, because there's no sovereign in space.
Yeah, of course. Yeah.
The fundamental idea behind blockchain technology is universality, which means that anyone can access its tools and services, whether those in power like it or not. This principle is tied to values like privacy and value, despite causing chaos. The belief is that such chaos is productive or a necessary trade-off for human flourishing. On the other hand, AI communities have a different worldview, as AI's basic role is to observe human behavior and replicate it in all its nuances. This eventually leads to the end of human labor, technical centralization, and total data transparency. Raoul believes that AI replacing jobs could be problematic and slow down the recovery from a recession, but he does not believe in structural inflation due to the replacement of knowledge workers by AI. Powell predicts that the cryptocurrency boom will last until the end of 2025, and he emphasizes the importance of understanding the risks of investing in newer technologies like NFTs and DeFi while also highlighting their potential for exponential growth and breakthroughs. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.